Hey, what's up, ladies and gentlemen? Hope you're doing great. It's me, Matt Corvo, your favorite trader, world trading champion, hedge fund manager, the wealthiest, the best, the coolest trader out there, proud owner of a gigantic, monumental, gothic castle, and a fleet of supercars. It's coming, trust me. For those who don't know me, my name is Matt. I'm from Montreal, Canada. I'm 26 years old and I've been trading for 5 years. I trade futures and order flow. I've been learning about order flow for about 6 months. And basically, I'm doing those videos documenting my learning journey, doing my journaling, recording my screen and talking over it, going over the day's price action, and studying reversals on footprints. Alrighty, so we are Monday, November 10th, 2025. Excellent. So this is TradingView. Let me just open here TradeZilla. So today I traded, but I got to the charts quite late and I was extremely angry at myself for my lack of discipline. I did falter this morning and I wasn't proud of myself whatsoever. But I got on the charts quite late and I took a loss right where the reversal happened a little bit after. It would have been a beautiful trade. You know, I keep missing those beautiful, amazing trades. But one day, you know what? I will fucking catch them and I will make millions of dollars. I will make millions of dollars. Okay, so let me take you to TradeZilla, as you can see here. And every day I start by taking 30 minutes doing something called my pre-market game plan. Okay, so before the market opens or before I get to the charts, I do my game plan. And I basically look at economic events, identify the market conditions, identify the directional bias, and I identify key levels for the session I want to play from. So let's start on the daily. Okay, this was the daily this morning on ES. So I said on the daily, we are overall bearish, now retracing, giving a retracement, but not confirmed bullish yet, okay? We might still be retracing lower and lower. So coming to the 4 hour, I said we are clearly bearish with a series of lower lows and lower highs. I said here, around here would be a good place to short. This would be a nice place for our lower high to be in place and to short it targeting the lower low. And I said on the 15 minutes, look at that. I said I would like price to take out this structure here. I would like price to take out this swing high so that it would be our liquidity grab for our lower high to be in place to go lower. Yeah, and I said basically we're bullish, but overall we are bearish, okay? So I look at my directional bias on those three time frames, the daily, the H4 and the M15. And then what I do is that I mark my levels by looking at the volume profiles. And right when I was doing my pre-market game plan, price came at the previous week point of control. That was also lining up with a 5-minute imbalance on ES on the prints. So I said, if I see the sellers getting absorbed, I'm taking it. I said it completely failed. It went completely through. Great. And now I compared the imbalances. You see this one with very small digits. And now you see this one with much bigger digits here, 126. Here they're all 2 digits. Here it's 3 digits. So this one holds more weight. You have a higher probability of having a reversal at this one than this one. Okay. And this is exactly what happened. It came even lower to hit London's low here. So I took a loss here, I believe. And it came lower to even react at London's low. Then it gave a small buy all the way to this level on Bookmap where you had 170 sell limit orders sitting on the ask, okay? And that's where price gave its retracement, lower low, lower high, then to give a lower low later. So basically that was my game plan, that was my scenario for the day. Because this is what I do in my pre-market game plan, I do scenarios basically of what could happen. And this was my scenario. I even had a second one of going lower to take this out. We had 2 gaps. We had a gap here and a gap here, which was a little bit crazy. This one was from the weekend, and this one I have no idea why it was formed at around 10 in the morning. Excellent. So now that my pre-market game plan is done, While I'm trading, I'm taking a lot of screenshots, basically going over what I'm thinking, what I'm seeing. This is what I'm seeing evolving in price. This is what I'm thinking price is doing. And I'm basically taking notes of everything that's going on. All right, I said price is being stalled here because of the imbalances here on the 1 minute and the levels on bookmap. Very normal. And now I said I completely missed this entry here because I was a little bit busy playing with my settings on ATAS because I want to look at delta footprints with volume, not just regular footprint that's showing balances. So here, as you can see, was a little bit messy, but after the aggressive buyers showed up and that thing shoot up like crazy. And basically a lot of levels were appearing on bookmap, a lot of sell limit orders, and the buyers were filling all of them. You see that? And those levels were very much acting as magnets for price. And here I was asking myself, how could I enter on those pullbacks? How could I know when the pullback is in place and just enter here and get re-entries? Re-entry here, re-entry here, re-entry here. Because I remember my first mentor ever in trading, he was talking about when something goes in your favor, when a trade goes in your favor, load that shit up. He was talking about load that shit up. Load it up. But obviously you cannot do that in an unprofessional way. You have to do it very professionally. You cannot start loading it up here and then it retraces a lot and you're like, wow, what a bad entry. You went into a lot of drawdown. It's much better to do it here. But there are ways and strategies to know when this is in place. Maybe it's lining up with something here. Anything, a level on bookmap, okay? Anything. VWAP, I don't know, but I'm trying to figure it out, and that's why I took that note. So those were basically the notes I took. And let me show you exactly what price did. So basically this was my missed entry and this is the whole move price did. So basically today, what I would like to do with you guys is study that point of reversal on the prints to see what happened here. Study this one and why it was a little bit complicated. Analyze my loss here. Look at what happened here. So let me just mark it up. We're going to study what happened here. What happened here. What happened here. And what happened here. Awesome. Okay, so this here at 10:20 was before I got on the charts. We're just going to analyze it at around 10:25. We're going to go on the footprints and see what happened here. At 9:30, it shoot up and then price consolidated for about from 9:40 to 10:30. So for about 50 minutes, price consolidated, very ugly. And then you would think that price was really clearly going down, down, down. But remember on the M15, we were somehow bullish. And price came to the previous week point of control, took out London's low, a little bit lower. You had imbalances on the 5 minute on the footprints, and you even had a level that never got filled with 200 buy limit orders at 67.90. So price reached more or less that level and then it consolidated or was a little bit ugly from 11 to 11:50, a good 50 minutes of compressing for the next move. And after is really where it took off like a rocket. So this is the basic premise of AMT, auction market theory. We basically have zones where price is compressing when you call it balanced, a balanced market condition. So here you would call it somehow balanced, compressed. It goes out of balance, it starts trending a little bit. Balance, it's at fair value, goes out of balance, then balances, out of balance, starts balancing again, and then it shoots up. And it cannot just trend forever. It's hard. It has to stop, accumulate more orders, accumulate more liquidity. Perfect. So as I said, we're going to study on the footprint exactly what happened here at around 10:25, which is right here, as you can see. So we're going to go on the 1 minute. So just before starting, for those who are new to my videos, very simply, I trade Orderflow. I look at footprint charts here, as you can see, on a software called Quant Tower with my broker AMP, AMP. I also look at VWAP deviations, as you can see here. And last thing, I look at volume profile levels, very, very important. Okay, so I just want to look at what happened here. So, first thing that comes to my mind, very ugly compressed market, very very ugly. It somehow created a high here and some highs that were a little bit lower, and it's as if here we took them out here. We took them out. You could argue maybe it did some sort of a Wyckoff distribution, but I really don't see it. So I want to start looking at what happened here more or less. So this is very odd. It's not really telling you it's going to sell afterwards. What you have here is a lot of aggressive sellers with very, very strong numbers. You see that minus 872 all the way to minus 689 as the final delta. Very strong, aggressive selling, but the passive buyers are very strong, and this candle does not go low compared to this one in any way, shape, or form. It keeps going higher after. But if you see here, those numbers were super strong, but it was somehow indicating to you that the sellers were somehow starting to show up here. This candle had no follow through whatsoever. This one, it went up, but with very, very little numbers compared to those ones. And here, it didn't really go up. It ended up green, but the sellers did not manage to push it down. After what you had, I would say strong numbers, but they're not as strong as those, obviously. And price did go up a lot. And what's constantly going through your mind when you're looking at a place of a potential reversal on the prints, are we having follow through? Do we have follow through? Are the buyers or are the sellers getting rewarded for their efforts? Obviously, you're looking for a sell here because we took out London's high, and I just forgot to say we are somehow bearish on the 4 hour and on the 15 minute. We are short-term bullish, but also overall bearish. So we're looking for shorts, correct? We're looking for shorts. We're looking to short this, okay? And basically, what you want to see here is the buyers having no follow through. The buyers having strong numbers, but then the sellers are really showing up. This is what you want to see. And now here we're starting to see it. We're starting to see it, okay? First, you have a red candle, which just means from where it opened, it went down. So that's why it appears red, and it also closed below its 50%, which I like. But it went all the way from minus 146 to minus 32, which is not super great. Not the best numbers. I want to see something much more red, okay? Something much more bearish. Now we want to see follow through of that candle, and we're getting it here, but there's a problem with it. Do you see what it is? We have a big wick to the downside, indicating a lot of buy pressure still, and it went all the way from minus 230 to positive 264 final delta. And you always want to compare the delta to either the max or the min delta. If you have a green delta, you want to compare it to the minimal delta. And if you have a red delta, you want to compare that number to the max delta. And you always want to see, if my number is red, how close was it to the minimal delta? If the final delta is green as here, you want to compare it to how close was it to the max delta. If the numbers are similar, it's indicating a lot of momentum, a lot of strength. Here, it went all the way from minus 230 to 264, indicating that the sellers got wrecked, basically. You see those two numbers, 275, 264, very, very close. Now, let's come here. Are we going to have follow through? Just by looking at the wick and at those numbers, you can tell price will go up a little bit still. It went from minus 262 to minus 164. Okay, there's a difference of about 100 here, and that's why it went up just a little bit. And now if you look at this one, it went up, but not by that much really. So it went all the way from minus 97 to 153, and obviously the 153 is a lot closer to the 189. So the buyers are still present. So still you're not taking any sell. You're not taking a sell. You're seeing this. It's really the candle after that was your signal to enter. There are many things I like about this candle. Zeros at the top. So this is a volume outlier, and you clearly see that the buyers got trapped here. You even see here a large sell order, and basically price was able to defend it a little bit. So you have to pay attention to those numbers that are clearly outlier and ask yourself, are they able to defend it? Are they able to defend it? So they got trapped here and went down like crazy. And even with positive numbers. So this is what you call a divergence. A lot of aggressive buyers are trying to push it up, but not only does it not go up, it goes down by a lot, okay? It went down from here to here compared to the last candle. A lot of sellers here. So it's telling you that the aggressive buyers are getting absorbed by the passive sellers. And really this next candle could have been your entry. It could have been your entry here. But then it consolidated for a few more minutes from 10:30 to 10:36. So around here you could have entered at 68.32. So let's put it here. 68.32. Stop loss above the high. What do you target? Very good question. I would have targeted the previous week point of control. And knowing that usually the point of control, especially the previous weekly one, knowing that it's very choppy, I would have probably targeted the London's low right here. So this was a beautiful 9.5 Rs, which was completely missed. But honestly, I might have gotten a few losses here. Okay, so I want to talk about the loss I had here at around 11. Okay, I remember. It was right here. It was right here where I got tricked. So very simply, I was watching the charts. I still hadn't marked that level, so this is 100% my fault. My pre-market game plan was not done before I took a trade, and I would have saved a loss, really. So price came to previous week point of control, lining up with an imbalance, but not the strongest digits again. And it was starting to give a reaction here. So I basically said, if you remember in my TradeZilla, if I see the aggressive sellers getting absorbed by passive buyers, I'm going to look to long here at this 07 area. So as you can see here, super negative numbers, super negative numbers. And you even have this candle after where the volume is extremely similar. This one even has more volume, but the numbers are way smaller. You see here, minus 2,000, minus 1,800, but the numbers are really slowing down, telling you that those aggressive sellers are really getting absorbed by the passive buyers. So already that's a hint. Hint number one. Hint number two, the volume is very similar. You see here 8,000, 7,000, but look at the size of the candle. Very small compared to this one, which is huge, and this one. So it's telling you there are a lot of buy limit orders, passive buyers waiting here, absorbing everything. And also the fact that the min delta ended up being half of what the final delta was. Okay, you see that here? I saw the aggressive buyers showing up. They entered here. It went from minus 77 to 581. The 581 was very similar to the 674. That was my first clue, and I wanted to enter on the next candle, and I like those numbers very much, and I basically entered here. But this is a common mistake I see. Price likes to do one impulse, and then it tends to consolidate a little bit. But in this case, I got tricked because obviously there were more imbalances to the downside and London's low, etc. So this was a failed trade, but I wouldn't call it the worst trade of all. I wouldn't call it the worst trade of all for sure. If we come lower, this is where I played from that imbalance, but there were also two more imbalances here on the 5-minute where price bounced off from. And I remember looking at those digits. They were looking pretty nice. Let's look at them right now. If you see those digits, they're huge imbalances, okay? 129, 101, 108. Strong, even a 4 zones, great imbalance. Even this, great. This one, very good. So you could even call it maybe a fair value gap. Maybe there would have been a fair value gap here. So this could have been a smart money concept trade. Oh no, not at all. Look at this wick. So here I'm going to tell you something I didn't like about that reversal, and I will explain it to you here. So let's say here you have your level, very good. Either value area low of the volume profile, imbalances on the footprint, or liquidity levels on bookmap, or a VWAP deviation, etc. Price comes, and it rarely does a clean reversal like this. Very rarely. What happens a lot is Price comes, it does an impulse, but then it retraces, it does a small pullback. And then it could consolidate for as long as it wants. It could consolidate for 10 minutes, 30 minutes, an hour, or even for 5 minutes, and then go in the other direction. Remember, auction market theory. So here, it basically did its consolidation, but it's just a wick that touched the imbalance, which I don't like. I've rarely seen this, and that's maybe why I didn't take the trade in the moment. But let's just look at it. So let's go at 11:40 on the 1 minute. Okay, so here price touches our big imbalance. We have the numbers here are quite small. 1900, almost 2000, 2500 here, and now a big candle, 5000 with very negative numbers. Okay, they're more red than the others, and basically left trap sellers here, some zeros at the bottom, big wick to the downside, aggressive, very aggressive selling. But now what are you asking yourself afterwards? Are the bears going to get rewarded? Are they going to get follow through? And boom, you're really not seeing it here. It went down by all of this, so you're expecting maybe after another continuation candle, and you're really not seeing it. You have this candle, however, with a big wick to the upside, indicating still a lot of sell pressure, but aggressive buyers really showing up here, with the max delta being at 354, but still ended up at 21. So that's why you see this big wick here. And now really what you're asking, if you don't know, because you're in real time, you don't know what's going to happen, you want to see, this is a tug of war. Who's getting follow through? Are the sellers going to step up, or is it the buyers that are going to step up? And basically here you see very strong buyers coming, 164 to 157, super good. But now it just starts consolidating for a good 10 minutes, where it's pretty ugly. It starts consolidating for 10 minutes. Each candle has no follow through after the other, just accumulating orders. Maybe I would have maybe gotten here with this imbalance, but my stop loss would have been way lower. So my stop loss would have been quite big. Maybe I would have gotten here, but quite a dirty area, to be really honest with you. Here I don't see any numbers where I could have entered. Usually what I like to see is when I see a delta outlier, price comes revisit that level and could have been your trigger. So here, let's have a look. Maybe my entry would have been at 99. Let's put it here. 99. Stop loss under the low. Okay, and what do you target? Either this high. That was a nice 6R. Or even the previous week value, the previous daily high would have made more sense. But really, guys, I don't see really clean entry where somebody could have entered somewhere here. I just don't see it. There was nothing here to enter. I just don't see it, guys. So we went over that zone. Now I just want to go over this one at 12:15. Okay, so first of all, okay, price coming back at VWAP, doing a break and retest of it. Okay, that's the first thing I see. But on the 1 minute, it's somehow a failed break and retest. You see those selling imbalances failing. So maybe you could pay attention to what's going on afterwards. Okay, this one and this one, you're paying attention, but still, I don't really know. Here's something that I like to do. I like to drag a volume profile on swings. And as you can see, sometimes where it retraces, it could be somehow like doing a fib retracement. You could say, yeah, it retraced to the 50%, whatever, but it really retraced to the value area low of the total volume of this swing. So maybe here could have been a place where you start paying attention to what's going on here, and now you zoom in. Okay, positive numbers, are we having follow through? No follow through. Super negative. Are we having follow through of the sellers? Boom. Yes, a lot of follow through. Those numbers are very similar. The final delta and the minimum delta are very similar. Now, are we going to have follow through? Boom, no follow through. Now, this candle is interesting. Big wick to the downside, indicating a lot of buying pressure. However, I like to see trapped sellers, not trapped buyers. I like the zeros, that's okay. However, I don't like very much the fact that it went from 237 to 69. Don't really like it. Now you want to ask yourself, are we going to have follow through? Boom, you see this one? So this candle is super interesting, guys. Aggressive sellers are really showing up in this candle, as you can see with the final deltas. But did it go down? No, it went up. It went up. And with all that aggressive selling, it went up. So it's telling you that the passive buyers are showing up here. So you're paying attention to what's going on. It should have gone down, and it's not going down. So now you look at the next candle. Interesting. Maybe the aggressive sellers are getting absorbed here. Now the aggressive buyers are showing up. It goes from minus 106 to 48. So you see those numbers are constantly getting smaller. Minus 1100, minus 10, minus 293, minus 106. The positive numbers are coming back. You see it here, and boom, it really starts going up. Maybe you could have entered here. So that is around the 6812 level. 6812. Stop loss under. What do you target? Same thing as here. Okay, so this is basically how today you could have caught 9.5 plus 8 plus 7. So that would be 15 plus 9, 24 hours today. And me doing this video, I had a loss here, which sucks. Price even went higher to previous week value area high, but however, it could have very well reversed after hitting the previous day high. Okay guys, so let's just finish my journaling on TradeZilla. How did it go on 10? I would give it a 7. 1 stop loss. Was I right about my pre-market directional bias? Yes, I was. What lesson can I take out of this session? This is the most important part. Look at the volume profile on swings to see where it could retrace. That's one thing. Reversals are always ugly, so don't wish it was easier. Wish you were better. That's for one thing. All right, next, don't take entries, example longs, when you have important levels right under. Again, pay attention to the digits in your imbalances. So that is pretty much everything I learned today, I think. If every day I can learn 3 or 4 things, at the end of the week, it's between 15 and 20 things. So at the end of the month, you're learning a lot of stuff, right? So this is basically experience. There are no better teachers than experience and the market. It's not 10-minute YouTube videos, it's the markets. All right, guys, so that is pretty much it for today. This was the S&P 500 E-mini futures. We were Monday, November 10th, 2025, and it was quite a nice day, honestly. It was a nice Monday, and usually they're very choppy. End of day recap, didn't force any trades, max loss. Perfect. All right, guys, so that's going to be all for today. Cheers.